Hi, it's Paul from globaltradingsoftware.com. Today's video is for the swing trading bundle. I'm going to start off with the TradingView version, then I'm going to go to the Thinkorswim version just to show you basically it's exactly the same. No matter what platform you do, it's the same strategy, it's the same rules for entry and how it all works. Yes, it looks slightly different because each charting platform is different, but in reality it works the same. So with the swing trading bundle, sometimes you don't use all of the tools in a toolbox. In this case it was elliottwave, but also when I go through and show you on the Thinkorswim version, when everything's switched on, we have the expert and we have a harmonic pattern forming right now as well. But first of all, on the on the TradingView version, just going to go through the rules for this setup. I'm actually in this trade with my inner circle now. We're over 200% profit times risk, so 10,000 risk for this trade is now at 20,000. So that means if I was to just draw the original stop loss in here, down here, just below the wave 4, in white so you can see it. If the original trade came back down, the amount of shares that I bought would have risked taking a stop out there and making a 10,000 loss. Now we're at over 20,000 profit. This is just an example. So how did we get in this trade? elliottwave was the main driver for this one, and it is for a lot of swing trades on stocks on the daily time frame. We've had a profit taking pullback on the wave 4 here. It's found support in the amber zone. That amber zone represents an 80% probability it's going to go on and hit that fifth wave target zone here, which is automatic in blue. Around the center of it's about $94. Now we're in a state at the moment with stocks where they are not moving very fast at all. The whole, the indexes, the stocks, everything's just very, very slow, but they still move, as in this case. So what we look for on this wave 4 is to measure that behavior. So the first instance, it's pulled back into the amber zone. Great. The next one, I'm using the Ema Cloud, part of that swing trading bundle. And this, I was on 55 and then 89 down here as well. So pink is 89, the grey is 55. Now these Ema Clouds on wave 4 pullbacks really do hold well. Your sweet spot, if you like, is the grey, the 55, and your last chance saloon, if you again, is the 89. Usually one or both of those, especially if they converge, do act as that non-linear support. But then we need to understand the behavior of this pullback. So this was a fifth wave move stroke earnings play. Okay, so on the false breakout stochastic, the first subchart, let's make it a little bigger here. We had a false breakout dots form on the wave 3. That's strong bullish momentum. Then we pull back, and on the wave 4 we cross over in the oversold zone against that false breakout. That means there is a high probability that it wants to return to that main bullish trend, and this is what we're trying to do. We're trying to trade the trend after a profit taking pullback, and elliottwave, that wave 4, is the profit taking pullback that we want to see and measure that behavior. So as far as the stochastic is concerned, that's good, and as it happened, it did pull back into there. The next one is the 535 oscillator. So this is another measurement of that wave 4 behavior. As you can see here, the red crowning during the wave 4 needs to be between 90 and 140%. Spot on, absolutely within parameters. So this wave 4 behaved as we expected, and we've been able to measure that. Then we have the bias indicator here. So the bias indicator looks up time frames. Okay, so it's automatic. Basically, when it's in yellow, it is neutral. When it's green, on the higher time frames, we're in a bullish state, and when it's red, we're in a bearish state. So when we're looking for entries for here, we want to make sure that we this 6-4 moving average high, this green moving average where my cursor is, that's the first point where we think, this is where we should consider an entry. But we want to make sure we get the green on the bias indicator, which we did on this candle. So then we just need to say to ourselves, right, where's a sensible entry for this? For me, I'm one of these whole dollar things, so we want to make sure that not just that first day is bias, we are second day bias here, we get the gap up, comes down, we get the high, so I want to go above 77.08, and that's the entry that I got there on that swing trade. We've been in this quite some time now. Usually you'll see quite a bit quicker move here, and the Ema Cloud would have been a little steeper, and we'd use that to manage the trade. But right now we've been in this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 28 days. Okay, so this is a long swing trade, but again, these are the market conditions that we're in. I've been very sensible managing this trade. Just under $86 now is where that trailing stop is. We do have we have 3 candles clear of that now, with higher highs, higher low. Yesterday's volume, again, when we're looking at managing these, was higher. Okay, so that's a good sign, but we got the spinning top. So the idea is, for me now, is I'm going to probably use this 6-4 moving average low. Once it starts to move through this stop, which is locking in 185% profit times risk, so it's locking in a lot of profit here. We are just going to follow this 6-4 moving average low, part of the Elliott wave indicator suite. Each day it closes, just to then manage that trade. Okay, so that was the trade entry. A little bit about the trade management there, but more importantly, looking at a few elements of that swing trading bundle. This is the trading view version. We've used the Ema Cloud to just check that behavior of that wave 4. The Elliott wave indicator suite is the main driver in this particular trade, with the performance in the pullback zone, the stochastic, the false breakout stochastic, and then the Elliott wave oscillator. But there are other things within that toolbox, which we're going to look now on the Think or Swim version, that will help us sort of get in that trade and then potentially manage that trade or get in further trades. So let's just minimize that. So this is what it looks like on Think or Swim. We have the wave 4 pulling back into the amber zone as it is. We've got the Ema Cloud here, the 55 holding as support. We've got that 535 oscillator pulling back between those zones. We've got the false breakout stochastic. The cool thing about the Think or Swim version is that we can actually get this bias indicator, and we can move it into that stochastic to save a little bit of real estate. As you can see there's the earnings. That was our catalyst for our trade, if you like. So stars were aligned. We had the wave 4 pullback, we've got earnings coming up, we got the bias going green, we're looking for an entry, we get it just after earnings, the day or two after earnings, and we're in a great trade right now. So a couple of things that are extra on this chart, because I just had them off on the last chart just to show you where we got that trade set up from the toolbox. Now we've got the auto harmonic forming. We've got a bat pattern forming here. This just goes to show you that this doesn't happen overnight. These harmonic patterns. We've joined the wave 3. That's the first leg. We've had the pivot here, and now we're moving up again. This bat pattern is far from complete. What we would look for is this continue in an ideal world, make a slightly new higher high into the 5th wave zone, and then we come back, and now you can see here we've got the automated completion zone for this bat pattern forming. So we'd look for that to pull back down, a bit of a correction, and then go again. It's not complete yet, but it's just actually showing you now that this is a live indicator. So every day that closes, this adjusts slightly and goes. So one of the other things I want to talk about is the X-spread algo as well. This was with swing trading, doesn't matter whether it's stocks, forex, futures, that sort of thing. We use the 6-star buy. Sometimes if we haven't had an Elliott wave, but we've got a 6-star buy, and backed up by this divergence cloud that you can see here shaded in green, all the way up here, that shows us we're in a bullish state right now. Okay, now the 6 star is a signal. If we haven't had that wave 4, an Elliott wave, but we've had a pullback, but it's not an Elliott wave pullback, we still get a signal on this 6 star. I mean, to get a 6 star, there's got to be 12 different parameters all aligned to give you a 6 star buy signal here. So very high probability move. So again, even if you've missed the 5th wave entry, you get the 6 star buy. Your entry is going to be just above that candle there at 78.71. That's still a good trade. So this X-Brad Algo is works in a slightly different way to the Elliott wave, in that it gives you more trading opportunities, but also allows you to understand, combined with a divergence cloud, exactly where you is. I mean, you see the divergence cloud there. That is telling us the volatility and the divergences are moving apart, and we're in a big bullish state, and this is where we are right now. Okay, so this again, this divergence cloud is going to give us confirmation from that X-Brad Algo signal, also from the Elliott wave 5th wave move signal. So everything's working together to give us the confidence in this 5th wave move. We are running out a juice of a little bit. Remember, we've got that stop on there, and I can put that in here. We're just below those 3 there, around about there. That's where our stop is right now. So the divergence cloud is still green. We're good. Let me just move this drawing out of the way. So what we're looking for really is using this 6-4 moving average low now to trail this stop. We can adjust the Ema Cloud if we wish. We can go really aggressive on the Ema Cloud. Another option with the tools in the toolbox is to put this maybe at 13 EMA. See where that gives us. Okay, let it adjust. A lot of calculations to do. And you can see there's where our 13 EMA cloud is. It's not quite at our stop yet. Again, you want to go more aggressive, you change it to 5. You want to go less aggressive, change it to 34 or the 55 original. The problem is we haven't had a parabolic move here, so we've just got to be patient. Swing trading, you have to be patient. That is the main aim of the game here. We've locked in 185% profit times risk, so risking 10,000 on that original trade, and that's not buying 10,000 worth of shares. That's actually if you get the trigger and it comes to take your stop out below the wave 4, you lose 10,000. So that's the risk. You risk 10,000. We're sitting at 18,500 profit locked in right now. We've got a sensible trailing stop. Become more aggressive over the last few days. Originally, once we'd closed up above the 1%, the 100% line, I was risk free. Then when we started to move up here towards the 160, I was locking in just underneath this pivot here. So if we just go a little bit tighter into this move, we were risk free just under this pivot. Once we started to pop up and go through here, we were just locking in profit just under this pivot here. Once we pushed through, the next sort of target for me was 160%. I was below the next pivot. As you can see, there's a bit of a theme here. We get an impulse, little impulse move. We get a little pullback. We get another move. But you can see here, this move now has had no real pullback. We're due for one, but we also need to understand where this behavior is going to be and what could happen here. This wave 3 is the high. In normal market conditions, you would expect this 5th wave move to go through that high and hit our target zone. However, the indexes are really, really tight at the moment. There's no real movement. This has done very well. It's actually bulked the trend of a lot of other stocks which are flat. So this is doing very well, but we need to be realistic here. It may not reach that $94 target, and we need to make sure we're locking in good profit. It's a good trade. So trading stops in, we need to see what the behavior is like when it gets to this 89.10. Does it run out of volume? Does it run out of juice? Do we have that pullback? This is why now I'm going to use the 6-4 moving average low, the red here, part of the Elliott wave indicator suite. Once we get a close today, that will be above where our trading stop is, and I'll just continue to follow that through. As you can see, during this 5th wave move, it's not closed below that 6-4 moving average low. So I think just on the behavior of this 5th wave move, I'm going to use that 6-4 moving average low to manage this trade. Okay, so it's not long-winded, but I just wanted to go through all of the tools on the swing trading bundle, both showing you that initial Elliott wave signal, if you like, on the trading view version, and then just basically showing you on that think or swim version it's the same, just looks slightly different, but it works the same. And then just bringing into that the rest of the tools in that toolbox, the Ema Cloud, the bias, the harmonic patterns. And again, this in the future, this could be the harmonic could be a good trade for us down the line. We've got the XBRAD algo there, so if we don't get those Elliott wave signals, there's some XBRAD signals in there. And then we have the divergence cloud that it's not part of the bundle, but we're starting to understand that that's a really great addition to this to swing trading strategies. Hopefully that helps, and I'll speak to you all really soon.